Let's talk first about AngloGold Ashanti, because it is the largest. It's got the most diversified portfolio of mining operations. It has done quite a lot of portfolio re-engineering in recent years. Remember, it was Bobby Godsall, then it was Mark Kutufani, and now it's Venkat. He's got a longer name than that, but everybody just calls him Venkat. The assets principally derive from the old AngloGold assets, as well as Ashanti Goldfields Corporation and then subsequent acquisitions. The market cap of this lot is less than it used to be. It's 51.4 billion rand. It used to be 3 times that as recently as 2011. It's not currently profitable. That means in its most recent results, it's still taking write-offs and write-downs and what have you. So it has no PE. Minus PEs we ignore. And the dividends, well, it has paid dividends in the prior past half year, but it didn't pay a dividend in the most recent period. So I'm going to ignore that 0.38% on your screen. Okay, Gary, so this is the sort of lion of the sector. I think perhaps it's got the largest market capitalization of any gold company anywhere in the world. Maybe Barrick is larger. But, I mean, Venkat's done some good work. Recent developments there, though, a bit mixed. What's your overall view?
Overall view, I mean, yeah, like you said, it's the biggest. I mean, it's difficult to look at these in market cap terms anymore because you get the share price fluctuating so much. I mean, the market caps change. I mean, AngloGold producing, I think it's about 4.4 million ounces of gold, making it by far the largest, at least in South Africa. Yeah. Now the issue around AngloGold at the moment is that it is fairly highly leveraged, and they desperately trying to pay down debt. And I think the market sort of picked up on that and said, your balance sheet is in distress. And I mean, from our interpretation, it's definitely not in distress. I mean, yes. Their first bond comes due, I think, only in 2020.
That's the article you tweeted today, right?
Yes, that's right.
I went and read that. That was a Mining MX article which says through asset sales, they could probably delever their balance sheet.
100%. So they are looking over the next sort of, 3 years probably to sell off some of their sort of, unprofitable mines, use that to pay down the debt. I mean, they want to get their debt below sort of $1 billion. And I think that's going to put them on a very solid footing going forward. If you look at what they have been doing, I mean, all these gold miners have been following a policy of cutting costs because that's all they can do. They can't influence the gold price, but they can influence where they're mining and how they're mining. I mean, AngloGold's brought down their costs by about 22%. So, I mean, their all-in sustaining cost is around, I think it's about $1,140 an ounce.
As high as that?
Yeah, it's still high, but a 22% reduction. And I mean, with the sale of those assets, I think that will come down even further. Yeah. So out of the sector, we think that perhaps the rating that it's been given is a little bit unfair, and there could potentially be an opportunity here if, taking the gold price out of the equation.
Okay, well, there's the 5-year share chart. So that's what I was referring to. They reached an all-time high of about 380 rands a share in 2011 when the gold price hit a peak of $1,800. Since then, going downwards. The other thing I just want to put on the table is about 3 or 4 months ago, they had an embarrassing climb down where they talked about and proposed a deal to the market where they were going to split their South African and international assets and do a substantial rights issue, only to find that their anchor shareholders, like John Paulson's hedge fund and a couple of other players, really didn't like the deal, at which point they withdrew that transaction. Yeah. And now they've gone back to plan B. That's quite unusual for a company of that scale because you would expect them normally to have checked those things with their shareholders, the big ones anyway, beforehand.
Yeah, 100%. But I think that's also, I mean, coming on the back of the Goldfields Sibanye spin-off. I mean, just seeing how well Neil Froneman's done with at least Sibanye, with the South African assets, and how much trouble, at least Goldfields has had with South Deep.
Okay, but on its own merits, you appear to be leaning perhaps towards saying this one is your preferred one.
Yeah, like I said, like because we're doing a pair structure here, because we're taking out the risk of the gold price movement. We're just saying we believe AngloGold is going to outperform some of the others. We would be going long AngloGold at this level. We have actually got long AngloGold against some of the other companies. Okay. That's performing very well.
And subject to that qualification, though, you're going to give it a hot.
Yeah, I'm going to give it a hot. Yeah, definitely. I think the market has punished this one unfairly. I mean, if you're looking for an intrinsic value on the company, we think it's higher than where it's trading at the moment.
Okay, I'm going to go not hot, and broadly speaking, I'm doing that across the sector because I'm anxious that gold has sort of lost its luster. based on where it was back in the day. People used to buy it for safety purposes. That seems to be out the system.
I would agree with you that if we're looking purely at the gold price play,
Yeah.
I don't see the gold recovering to sort of that $1,900 an ounce. To get a gold recovery, you need inflation in the system. And I mean, you can see across the board, you know, everywhere we're struggling with deflation, not inflation. You know, if we don't get inflation, we need basically Armageddon. We need massive fear to come into the system for guys to go and buy up the gold as the safe haven asset. And yeah, I don't see that either.
Well,
I mean, we've managed to avoid that. So for me, these definitely are relative plays. They're not. It's not an absolute punt going long on gold.
We got the relative.